What if the next US recession isn't caused by war? Or a banking collapse? Or a housing bubble? What if it's triggered by one institution? The most powerful financial institution in America. The Federal Reserve. Right now, interest rates are at levels not seen in decades. Markets are nervous. Debt is exploding. And history shows something chilling. Almost every time the Fed aggressively raises rates, a recession follows. So the question is it happening again? The Federal Reserve controls interest rates. When inflation rises, the Fed raises rates to slow spending. That means mortgages become expensive. Credit cards cost more. Businesses borrow less. Consumers spend less. In theory, this cools inflation. But there's a dangerous side effect. If rates rise too fast, or stay high too long, the economy can break. And we've seen this before. In 2000, after rate hikes, the dot-com bubble burst. In 2008, after tightening cycles, the housing market collapsed. Even in the early 1980s, aggressive rate hikes triggered a severe recession. History leaves clues. Today, America is carrying more debt than ever. Government debt, corporate debt, consumer debt. Over $34 trillion in federal debt alone. When interest rates rise, servicing the debt becomes extremely expensive. Companies with weak balance sheets start to struggle. Banks become cautious. Layoffs begin. The housing market slows. And confidence drops. Recessions don't start with panic. We already saw warning signs. In 2023, regional banks collapsed after rapid rate hikes hurt their balance sheets. Bond values fell. Liquidity tightened. Investors realized something. Higher rates expose weak systems. And markets today are heavily dependent on cheap money. For over a decade, low interest rates fueled tech stocks, real estate, and risk-taking. Now that easy money is gone. Can the system handle it? The Federal Reserve faces a dilemma. If it cuts rates too early, inflation could return. If it keeps rates high, the economy could crack. It's a tightrope. And the margin for error is thin. Some economists believe a soft landing is possible. Others believe recessions are unavoidable after aggressive tightening cycles. The truth? No one knows exactly when. But the recessions don't announce themselves. They build quietly. In debt levels. In tightening credit. In slowing growth. The Federal Reserve doesn't want to cause a recession. But history shows. When you fight inflation aggressively, something usually breaks. The real question isn't whether the Fed wants a recession. The real question is, can the economy survive without one?